Thanks a lot for joining me on this Tuesday afternoon market recap. We have come back from an extended weekend. It was the President's Day holiday yesterday in the United States, so we are looking at an abbreviated week's worth of work, Tuesday through Friday. I just wanted to give you an update, obviously, as at the structure across the board for the three closely followed US markets. We are seeing, again, continued bifurcation. In terms of the chart pattern signals, also, even during today's session, that of the net material change across the board. Let me just explain this a little bit further. Now, we do have approximately 10 minutes left in today's session. However, as at this juncture, or this timestamp, you can see on my screen here, this is the chart of the S&P 500. We are down just over 10 points at the moment. This is subject to change, albeit probably immaterially. We've got the Dow Jones Industrial Average down 173 points. When I flick on over into the NASDAQ, it's marginally, albeit, right, very marginally, just holding on to, right, the daily gain that we established as at the close of last week on Friday. We're at 1.32 points. So what does this mean overall for the markets? Well, you obviously are aware, hopefully at least in this public forum, if you're not in that pro analysis class, that we are very much sitting on our hands when it comes to our approach to the markets. It's not something that is all that rare, or I should say all that sort of common for us. We are generally invested in the market. However, more recently in that of 2020, we have been largely sitting on the sidelines. We've spoken about the divergences which are continuing to set up across the board for the financial markets. We're also noting, of course, some of the distinctions, the very clear distinctions that generally happen in the transportation average and also the Russell 2000 prior to that of a larger or more broader market correction. You can see here on my screen, this is a chart of the S&P 500. You can see also that we have registered recently anyway, a higher high relative to where we were in the midsection of January prior to turning down for roughly 2 weeks or so. The problem becomes, again, is this divergence here on my screen. You can see it very pronounced on the MACD. You can also see it on the RSI. And even if you were just to take a look at the stochastics alone and you ask yourself the question, is this a buy or sell signal? Hopefully, all right, alarm bell should be ringing that this is very close to that of a technical sell signal. So technically, all right, just work with me hypothetically here. If we were to see that of a large down day, dark Morobozu candlestick at some point in this week, you can assume that this stochastics is going to definitively begin to push out of overbought territory. It's not only common or a common trait on the S&P 500. When I flick on over and show you this on the Dow Jones Industrial Average, it is relatively a little bit weaker than that of the S&P 500, but a very similar picture. Again, we've printed a very brief high relative to where we were in January. We've got all of these divergent signals all over the place. This is on the daily time frame as well. If you take into consideration alone the stochastics, you can see that we are back up very much into overbought settings. And again, the only thing really holding this market up at this particular point are these exponential moving averages. Now, what we noted over the weekend was that there was a trapdoor in the markets, okay? And we've got this pressure point, so to speak, that if the markets do flinch below a certain level, okay, you can expect some very significant sell side volume to hit the market. Now, we haven't actually triggered that as at Tuesday or during today's session. And this brings us back into the discussion as to the overall chart setups, right? The structure of the market and also some of the prevailing chart patterns. Before I get into that, let me just quickly recap the NASDAQ. Again, marginally holding on to that of a net material positive gain today, albeit 1.32 points as at this current timestamp. Again, holding up above the exponential moving averages. But when I flick on over into these oscillating indicators, although we do not have definitive or at this point across the board of any of the three markets in terms of confirmed divergence, you can see, if you just wanted to look at this on a relative basis, just how overbought and overextended we are and how overextended we have been since, of course, that October breakout over here, whereby we've just seen these markets continue to trend. Now, again, we were largely long prior to this breakout. We were talking about it for months and months and months, and really for the entirety of 2019, we remained bullish overall in the market, and it's worked out very well up until the point or the changing of the guide as we moved into the calendar year of 2020. What makes this very interesting now is that if we go back into the daily time frame, you can start to see a little bit of bifurcation in terms of the candlestick patterns and also the chart pattern setup as well, because what I'll do is I'll just walk through some of the potential sort of patterns that we're looking at the moment. I'll start with the NASDAQ because it is probably the most constructive out of the three markets. If you wanted to look at this as objectively as possible, you could make the argument that this is some form of a stair-step continuation pattern whereby simply we're treading water, we're moving sideways, and we're waiting for the exponential moving averages to come on up to tag price like it has done in the past on a number of occasions, and then of course see the trampoline effect whereby we propel prices up to, again, continued fresh new all-time highs. That is the most bullish conclusion that you can make on the NASDAQ outside of the fact that everything else, technically speaking, is about to turn significantly bearish. I've recapped it on the daily time frame. Again, go back 2 weeks ago in that analysis class, the pro class on the Saturday, which is up on the website. We went out to the weekly and also the monthly time frame to put this in larger or broader perspective for you, just to show you just how deep the underpinnings of this potential correction are when it does show up. But when I go into the Dow Jones, this is where it begins to break down. Although we've got different formations of continuation patterns, what we certainly do not have is that sort of rectangular stair-step pattern that I just illustrated for you on the NASDAQ. What we have, which is a little bit different, or at least it's a difference of formation, but it does generally lead to the same sort of outcome, is out of a potential bull flag. I am a little bit sort of skeptical of this. I am a little bit sort of cautious of this potential stair-step but bull flag playing out. In that, again, just the element or to the degree in which we are extremely overbought, and those oscillators are really giving us those massive, or at least daily, weekly, and to a lesser extent, monthly sell signals, which are, again, still registering and are continuing to worsen. But if you wanted to make the bullish case for this, it would be the Dow Jones breaking out of this bull flag pattern and ultimately taking out the swing high that we produced. This is going back to Wednesday of last week, whereby we've got the actual continuation or trigger up here at 29,657. Now, I wanted to be very clear in this. Personally, I will not be taking any long trades on the markets themselves. I will not be jumping into diamond positions. I will not be jumping into, SPY positions or Q positions on the overall markets like we have held for really the majority of 2019, right through the entire calendar year until a point whereby the markets move out of their extreme overbought setting. Whether or not that occurs, at least, potentially we could just move sort of sideways here and allow those oscillators to reset. Or what we are going to encounter and experience is that of a more deeper material retracement. I can say, and I'm not deviating from this, and I never have, that I will not be entering again into long side plays on this market up until the point whereby we see these markets just allow themselves to take a breather for a little bit. Okay, there's a lot of potential sort of negative headlines out there, world events going on, which again just rattle me in terms of this market shaking them off and continuing to the upside. But if I continue the discussion into the S&P 500, although we don't have the continued, or at least the entire sort of daily candlestick made out at the moment, what this is starting to really look like, if I can illustrate this for you, and it is that of a rare pattern. Again, it sort of defeats the purpose of the pattern. We don't have a long lower wick, but this certainly at, I guess, best looks like a rounding top. If not, to me, it looks like the potential of a little bit of a diamond pattern, a diamond reversal pattern, which is very rare. However, again, it just adds to the substance that we were picking up on, whereby we've already produced that of outside engulfing candlesticks up and around a similar location, whereby, again, we've sold off, we've exhausted this sort of bullish momentum or this buy side volume in the market. And then again, it's the combination of all of these reversal signals, not only taking place on the daily time frame, whereby we're seeing, again, continued bifurcation across the board in the financial markets, but just the entirety of the picture itself. Something to me right now, it doesn't look right. And it could be the degree in which we've rallied out of and propelled out of this, say, 3,220 area. This is going back to the last trading session in the calendar month of January, whereby it was looking very, very delicate. Whereby, again, if we were to flinch below the low of that candlestick just here, being that of Friday's close, or at least, Friday's close, things were going to get significantly worse. Again, the handbrake was pulled, the market did a 180, but in its entirety, this picture here, mixed with the divergence and mixed with, again, this continued weakness that we're seeing, or at least these very sharp rallies followed by, again, subdued periods, it makes me believe that looking at this market, momentum is certainly, right, exhausting itself. It's naturally exhausting itself, and these divergences up and around these all-time highs, historical, that we've been a big contributor in and a participant in, and generally, anyway speaking, a primary beneficiary of over the 2019 calendar year, there is going to come a time whereby these gains that have been, I guess, priced into the market are going to be taken back, or at least a portion of these gains in this bullish ride, it is going to be given back by the market. And that's really what we are most concerned about at this point. We don't want to be buying up here with all of the enthusiasm and the euphoria. We'd rather be purchasing whereby the majority of people are actually afraid and they're actually selling to us. I mean, that's the dynamic whereby we want to begin positioning ourselves. So when we see these sort of these daily sort of candlesticks whereby the markets themselves are looking quite slippery. Yes, they've tried to stage a little bit of an intra-session rally. In fact, again, the NASDAQ is doing everything in its power to actually close positive at the moment. When you take it in its entirety, the entire substance of this type of move that we've seen prior, at least since the turn down in mid-January, and then of course this rally leading us into what is now that secondary higher high, it's got me very concerned again and continually concerned about the state of these financial markets. Understanding the majority of people right now, again, they're just very, very complacent. They expect this to continue indefinitely, and they don't understand how to actually apply concepts of technical analysis correctly, at least on a swing trade time frame. That's what we do. To the actual markets themselves. So again, there is a high degree of risk up and around these current all-time highs, although we have briefly, albeit pulled back. Again, I think there are some dark sort of storm clouds gathering on the horizon. They are drawing closer. And I just wanted to say again, just give you an update that, look, if you find yourself sitting on the sidelines and just watching this market from afar, really what you can take away very objectively at this particular point is that the market itself, it hasn't gone anywhere since mid-January. We can make that point if you look at the Dow Jones Industrial Average, or essentially right back where we were on the 16th of January. So again, although we have gone through the dip and we have gone through that rally, and now of course this slight pullback, we're pretty much unchanged up until the point whereby we were looking for the market to begin a process of an intermediate reversal. Now that we've gone through this and we have more information to work with, again, does it discount or take away from the original analysis and really our broader sort of larger macro hypothesis as we moved into, or thesis anyway on the markets as to what they do as we move into 2020? I'd say it doesn't. I'd say it actually makes it even more compelling and even more stronger as well. So again, although it's not going to be analysis heavy as at the close on Tuesday, right, I just wanted to give you an update whereby, again, just to tell you, look, I'm looking at this market from the sidelines. I'm looking for an opportunity to reposition into this market. And really, it wouldn't surprise me if we come into a session this week, if not next week, whereby we see these markets, if they haven't broken out, and really this is what it's going to boil down to. Are these markets at this particular juncture going to break above their swing highs? Are we actually going to achieve the confirmation of a break to the upside, which is going to confirm potentially that bull flag on the Dow Jones Industrial Average? Is it going to confirm that of a stair-step continuation pattern on the NASDAQ as well? And to a lesser extent, is it going to take away the potential diamond reversal, which is setting up on the S&P 500? Because if the markets do not take this path, all right, if we do not see these confirmations over the coming weeks, there is going to be pretty much a temper tantrum in the markets whereby you're just going to see a lot of people selling into, or at least trying to exit as quickly as possible, which is just going to add to a lot of the sell side or the supply side dynamic of the market itself. So just be mindful of that. Again, the markets themselves pretty much stuck in the mud, although we have gone through an oscillation in price themselves. And really, we're waiting for the continued confirmation of this market to break above its swing highs at the moment. Otherwise, be prepared for the trapdoor. And I use the term trapdoor because we've pinpointed it. We understand where that pressure point is on the market. And if that trapdoor is triggered, and if you do see price action move below that trapdoor, it really is the end game in terms of the intermediate top, which I believe the markets are pricing in prior to a larger correction, which is going to set up that fantastic buying opportunity to people who have been doing the correct thing, who have been diligent, who have been observing, of course, some of these technical trends and also these reversal signals set up, not just only over the past couple of days or weeks, but it's really been a multi-month sort of progression. But they're the people who are really going to be rewarded for what is really to come in the late stage of 2020. At the moment, however, I think very much we've reached the summit, or we are very close to the summit on an intermediate time frame. And we're looking for potentially this market to actually push over the hill. Maybe this is the beginning of it here, prior to it settling, and then of course us establishing positions to take and to ride into, at least deeper into 2020. So I hope that has helped you as at the close, or very close to the close on Tuesday afternoon as I sit here and bring you this recording. The markets have probably closed depending on how long I've spoken for. So again, we'll get that final print in the markets themselves. Actually, I'll do it while I'm on the airwaves with you now. But as it stands, just be mindful of that. Really, that's the whole premise and the point of this video, this public YouTube sort of resource that I do, is just to be aware of the risk and the dangers out there, as the majority of people are pretty much drunk on what has been occurring over the past 3 months or so. It ebbs and flows, it doesn't go up in a linear line. And that's my big warning to you. And it has remained my warning to you as we've moved even into January of 2020, okay? The markets are up marginally, or at least the Dow Jones Industrial Average. The NASDAQ, of course, is that market which is sort of the outlier. If I bring up the transportational average in the background, you can still see it's processing my request. I'll just move it over to the side here. But again, it's quite away from a highs, and we've really pinpointed some really nice technical areas as to where, if we see this market roll, as to where it's actually going to go through, or go to. Again, a lot lower as to where it was back in the period of January. We're not seeing Dow theory confirmation between the transportationals and also the industrial average. And when I bring up that of the Russell 2000 as well, you can see that it's still yet to reclaim that intermediate swing high also going back to January. So we're seeing varying degrees of what the market has done post that peak in the period of January. Now we're just going to have to monitor it over the coming sessions as well. So I'll leave it at that for this Tuesday afternoon market recap. If you have any questions whatsoever, email me success@pivotpoint-trading.com. Otherwise, again, jump into that pro analysis class if you want more in-depth analysis, especially going back to recordings. That in particular was very, very valuable, I believe, to a lot of people. All right. So on that note, I'm going to say farewell to you. Enjoy your Tuesday evening, everyone. And again, I'll be back with you later in the week for some more market addresses. It's James signing off on behalf of Pivot Point Trading. Farewell.